Well, no. Can you guys hear me now?
Yeah,
No?
buddy.
All
Yep.
right. Okay.
Good morning.
You ever make a call on Teams? You have to change your microphone. It's so inconvenient.
It
Anyway,
is. It's not just Teams. It's like you go from Teams to Zoom to GoToWebinar. What the system does is their system will reach for different audio devices, and then
yeah.
when you go to another one, then it's all screwed up. Yeah,
Oh, give me the green quotrons again, Blake.
I know. Anything but a quotient. I don't even care if I had to use a swivel body and share it with
Yeah.
with you. Let's use a Quotron
Yeah.
again.
I think everyone should go and watch a rerun episode of Taxi where Louis De Palma is a stockbroker for a little while. Go check it out. You'll be laughing. Anyway, Warriors, how you doing? Everyone okay? Ingmar and Mike and Blake is here, and Kman's here with us, and Luke Roman's going to be with us
Hey
for
Dale, I
the
just
end.
I just want to remind you we have ADP in 15 minutes.
All right. Okay.
I'll
Thank
pr-
you.
I'll get prepared on my end for it.
Okay.
Okay.
Steve, Hugo, I don't want the job. Hugo, AJ, how are you? Mandy, I don't know what about this Y, Coachy. I guess it's a pet name. Bran, how are you? Parth, you're a new handle. Haven't seen you. Okay. Anyway, watch it. So, the question I have for everyone that's attending today, and for Blake and definitely K-Man, is here's the chart.
And by the way, did you guys get a did you get any effects of the tsunami in
Uh,
your neck of the
uh,
woods?
I there's no water by me right now,
Oh, okay.
but I don't know if it was already if it hit the coast or not. But
Oh,
uh,
if there's anything you got maybe a 6-inch ripple over there, I would
oh,
assume.
I should have been out there with my board.
It-
Anyway, I could surf 6 inch waves. Nothing bigger than that, bro. Anyway, here's a question, right? Is this breakout for real in the dollar? Why don't I start with K-Man? How are you, brother?
Good morning, Dale. Everybody, morning, Blake.
Is this for real?
Good morning, Kay.
Is this Blakeout?
Yeah, this
Breakout
blackout.
real? Oh, now there's a
I,
good question. We had a bit of a chat about that on yesterday's Face, and yes, the dollar is strong. Yes, the what transpires out of deals is mostly before we really get to who's paying what and who's receiving what, positive for the US.
yeah,
But if you look at, I think if we zoom out a little bit, and I'm not specifically talking about a Dixie, but especially in the euro dollar as well, if we zoom out a bit, we could still be just
correct.
starting to range above 114 and a half ish,
Yeah,
and
there's the black
and
line.
and
See,
to me, yeah, to me, 114 and a half is the key this week. If we get a test, which would be nice if we get one to see exactly what's happening over there, and then bounce from there, I think we are going to be in a range, three, four, three, four big figure range or so, and that's going to be traded. So that's for the more medium term. If you zoom in again, I think it's not going to need too many beats of US data, just keeping them where they are, which are above European data, for instance, to keep a big tone under the dollar.
okay,
Um,
whether we make a new high or not, and this says that
I,
we still should, but I've had times where it's the exception, but it can bum steer you too, where you
mm,
do can top on a confirmed high. It's unusual, but
mm,
it can happen. Go ahead.
I think it's going to be difficult to print a new high right now for the euro dollar. It's going to be
Okay.
difficult because you have the euro side of things.
Okay.
And we have seen some GDP data Q2 already in the rear mirror, but it's still anemic growth. And I'm having difficulties to see new highs right now. Maybe later because there's so many investment plans in Germany. We've got those companies readying like huge amounts to invest in Germany, in Europe. Maybe later, but right now, I mean, in the short term still a better eye towards the dollar selectively, and maybe in the longer term we will have to see. But again, yeah, fresh highs on the euro on the dollar could be, but it's going to have to be euro dollar driving it because if you look
Well,
at
of
the rest
course.
of it,
Yeah.
is if
Yeah,
you look
because
at the rest
Euro
of it, like for
70% of the Dixie. So,
yeah,
whether I'll
15.75.
tell you what, whether or not we have one more high, if we don't, then we're correcting. I'm looking for under 110 in the weeks and months
Mm,
ahead. So, which will
yeah,
be, when you think about it long term, just a normal correction. Let's not forget that we bottomed at 102, right? So we went
yeah.
from 102 to 118. That's 16. So 8 back, 50% corrections, 110. And then we started another wave. So this is certainly an ugly week. So you probably have to sell rips if you get them. Like we're
Well,
getting one right now
yeah,
in cable. We're getting one in cable. Cable actually has a better look to it now. Do you think EG has peaked?
yeah, euro sterling got absolutely
Look
hammered
at that.
over the past couple of days. I understand after the very I think euro averse trade deal with the US. I understand, and but even today, euro sterling really.
Yeah,
And we're talking about that in our Flowonomics room. I'm trying to figure out if I missed something, why euro sterling is getting hammered so much because I don't see too much natural strength in the sterling as such. So I still think that people are getting out of long euro sterling positions more than anything else. But it's going to be interesting on the cable, and for the rest of the week. We've got loads of US data, loads of well, we've got the FOMC as well.
yeah.
And
Jobs.
cable could
Yeah,
be a big mover. I mean, if we would see dollar weakness, and cable is perhaps one of the candidates for a quick return higher, but all of that remains to be
I agree.
confirmed, obviously.
Yeah, because the commodity currencies aren't looking, Aussie's not looking great either. I just want to remind everyone, Blake said be careful on this candle before it turned. And Blake also said a breakdown in gold. I'm buying the dollar across the board. And so, these are the kinds of things that you have to be around for a while to know these things. And I know gold's bouncing a little bit, but I still think we're going to take out this low. People have been asking me for targets. Why not 3K again? Again, just like the euro, it would just be a healthy correction. So, you know, and I think that the gold's going to go down because of a more stable or strong dollar.
And you missed it, Dale, yesterday because you were en route.
Yeah,
Monday we talked and gold was kind of breaking.
yeah,
Kman had mentioned like, hey, we broke the trend line, but we're not really breaking down. And you were and Kman was exactly right. And I was like, I'm gonna buy this dip in the euro, and I actually bought it. I told everybody yesterday on the show that you weren't here. I'm
yeah.
like, I had to close my euro for a loss, but I turned around and I went short pretty aggressively. And, because I'm like, I
Nice.
have to listen to my own words. Like, because gold
Yeah,
started to break
yeah,
on Monday,
yeah,
Monday later in the day, it started that big
yeah.
red candle that you see there.
Right. I see
And I
it.
said, I said, screw this, man. I went and bought dollars across the board. So,
Nice.
yeah.
That's one of the toughest things traders have to do is to reverse their position. The other higher thing, tough thing that I talk about is, say you were long the dollar before the breakout and you took profits, and then the breakout happens, but it's 50 pips higher than your liquidation. A lot of traders will say, "Well, I'm not going to pay up." I'll wait for it to come down to where I got out. And the market
Yeah.
doesn't care where you got out,
Yeah,
guys.
exactly. Hey,
You know, go
by the
ahead.
way, I'm sorry. Just Trump just announced a moment ago, 25% tariffs on India. That's a big deal. They're one of our bigger trading partners.
Yeah,
Everybody's like, okay, EU, Japan, and China. Those are the big three, but then India
yeah,
is the fourth. And everybody thought that India and US would come up with some sort of deal. That's why Apple's moved a lot of manufacturing over to
right.
India,
Yeah,
to avoid the Chinese
right.
situation. And, yeah. So anyway, 25% on India futures just got hit, dollars firming.
Doesn't he ever think of geo things like, India's an ally, and if there is an adversarial relationship between us and China, India's even intervening in the South China Sea to protect, I don't know, maybe the Philippines. Why keep stick poking our allies, which we don't have as many anymore, in the eye? And besides Japan, and Australia's not that outspoken about their support of whatever the U.S. does, but India is our only big strategic partner over there. So
Yeah,
go
yeah.
ahead,
Hey,
K-Man.
Kman, you're chatting around in the chat room about India. What's going on in your view?
Um, yeah, I mean, India was already commenting about all that stuff and I mentioned it on the Flow Show as well, that they said that even if the 1st of August is a deadline, they count firmly on the fact that they can negotiate further than the deadline. But now Trump is apparently shutting a door. And as I said on the Flow Show as well, even if India is kind of the friend, so in Asia, it's still part of the BRICS, right? And
Oh yeah,
I
good
think
point. Good point.
I think Trump wants to prove a point here because he
I
also
forgot
said
all about that. That is really a good
he
point.
also said, yeah, he also said last night that he is probably going to send somebody over to the G20 summit in November to South Africa because he said, I don't like what is going on with South Africa, or I have a problem with South Africa. So, and we know that he just cut the deadline to Putin to 10 days instead of 50. Um, there is something going on BRICS side. I think he wants to prove a point here.
Yeah, he was going to double tariffs on all BRIC nations. And what do you trade this? Came in the USD ZAR?
I do I do occasionally, and I'm usually not a big fan of the South African rand.
Yeah,
So I'm most of the time I'm looking to trade long dollar rand, but
yeah.
I've been holding off for a while because it didn't stop coming down. So um, no,
I
it's
mean,
it's always a bit on my radar, right?
I looked
Go
at it
ahead.
because someone wanted my view on it, and I looked at the weekly, and man,
Yeah,
this could be a double bottom, and it's a higher low if it gets through like 18. So underneath it,
yeah, yeah, yeah.
I could see 17 again or lower.
Uh,
Anyway,
yeah,
the rand.
yeah, 17 off. If really it dumps, it could go even to 1665. But
Yeah,
Oh shit,
yeah,
data,
no,
data, data,
I
data. I'm sorry,
go
guys.
ahead,
yeah,
go ahead.
okay.
I got to take over. Sorry. We have
Okay.
Okay,
well, you guys can continue to talk. I just need to take over the
yeah, go
charts.
ahead.
All right.
We got 30 seconds.
That's not where I wanted to be. There I go. So I got the dollar here on the left, yields over here in the middle. Remember last month, ADP data came in way below expectations. We lost 33,000 jobs. Then we killed it on NFP. So just don't be so excited when the number comes out. And it was a very big, well, it was opposite it last month. So just keep that in mind, guys. Don't try not to jump to huge conclusions, especially with the dollar's got such a big tailwind right now. In case there's a miss.
104K
Oh,
positive, a little
geez.
more positive.
Oh boy.
Yeah, well, any excuse.
Well, yeah, it's good. And there's a lot of people that are anticipating the NFP to be a little weaker. I think Citi just put out a piece. Was it Citi? One of the banks just put out a piece that people might be a little bit too ambitious with their, strong NFP calls, but you know, people keep betting against the U.S. economy and U.S. exceptionalism. Anyway, Dale, you guys can go on with your conversation. I can manage the charts from here. So just watch the dollar index if we break new trend highs. I mean, we break 99.20, and I don't know if you really want to be short the dollar going into FOMC today, especially if there's a couple of dissenters. And just FYI, I will be on the we had Tracy here yesterday. I'll be on Ninja Trader Live during the FOMC announcement, not through the press conference. I'll be in the chat room for the press conference, which that's arguably where we're going to get more of the action anyway. But I'll still be live with them later today. But Dale, continue on your conversation. I'll manage charts.
Okay, I see you put out a tweet in S&Ps yesterday, Blake, about it potentially breaking down.
Well, yeah, well, actually, I was put it out that we'd bounce from this trend line, and we did. But and obviously, Japan last night when that tsunami futures once again they started to dip a little bit lower last night,
Yeah.
and obviously when the market realized that there's no nuclear facilities getting hit, and I mean, I don't want to say that there wasn't any damage because it was, definitely, I mean, 8.8, is it 8.8 or 8.7 on the Richter scale? That's like, I mean, the biggest one was 9.5 in the 50s. So it was a big deal, but market wise, the market just brushed it off. Anyway, we're still holding
Okay.
this trend line. It's your throwover, Dale. It's your famous throwover right here.
Yeah, and Nasdaq peaked at a number I had 23,500, and it didn't put in such a good day yesterday either. Well, anyway, we'll see. We'll see. I think it's ripe. It's ready to be plucked off the tree. I'm the boy who cried wolf. Anyway, I'd be careful. Why don't you show Uber? I talked about
Oh,
Uber.
Uber.
Yeah, I talked about Uber before this happened, that it was weak before the market had any negative tailwinds. If
That
you
was
look
your
at,
my drawing based on your conversation well, I want to say last week.
well, if they don't close that gap, like you have like 2.5 weeks of an island top. So that means all those people that bought over that level, they're trapped.
Yeah.
Okay. So I think we're going to go at least mid moving average. 76 is a possibility. The head and shoulders top measures 82. That's the first target. So,
I got a
uh,
question for you, Dale. What's the difference between, and you may know this because I don't. What's the difference between an island top and abandoned baby?
I don't know.
I know, I mean, I think they're the same formations, but I may be
Oh, oh,
wrong.
oh, okay. So someone gave
Abandoned
it,
babies when there's a baby
yeah,
abandoned up
yeah.
here and
So
then you leave
someone
it.
gave it a 20th century name.
Yeah.
Um, all right. So it's the same thing. It's something that gaps up and then gaps down.
Okay, all right. Yeah, I mean it's gaps up into like new highs and then you get
Yeah.
it, or you get an abandoned baby below, somebody leaves it.
You could have
Anyway,
island bottoms too. You could have island
yes.
tops and island bottoms. So,
Yes, yes, yes.
okay.
Hey, I wanna ask Kman this. I'm with you, Kay, as far as this yen goes. I think we talked about this yesterday. Kman and I, we got an opportunity to spend, just ourselves chatting yesterday, which is a great conversation. But I kind of want to expand on this yesterday from yesterday. You know, when the I want to say typhoon because I lived in Guam. When dollar CAD is breaking that 138 or trying to
Yeah,
right now.
Dollar
And
cat
you
is
talked
going
about it on the
heavy
flow
on that
show.
one.
I think it's got a real quick move up to the 200 DMA, which is going to set up really good for this jobs report because if we break out the next couple of days, like between the end of month flows and whatever, and we get, let's just say, a weak number, we might back ourselves back up to the breakout point, which, gives you a double opportunity to be on the long side. I like it, and I'm not long right now. But I wanted to ask you about the yen and
Mm,
Japan and
yeah,
the gosh dang it, the earthquake and all the type
yeah,
is it the typhoons and whatnot. Anyway, not typhoon,
mm,
it's the tsunami. Jeez, it's early in the morning. Um the dollar yen slumped down to here, and
yeah,
I was sitting in Asia last night and I'm like, man, we got a little false breakdown below these lows right here. And I'm like, this is an opportunity. And I hate, trading off of like these natural disaster type of events, but I'm like, this is an opportunity to be on the long side of the dollar yen, especially if it's going to break out to the upside, north of 150, which I think it's going to. So I bought it last night with the expectations to, continue buying it on a breakout above the 149 level right here. But when everybody still has the nightmares and you live through them of Fukushima, right? So whenever there's a tsunami, you see the yen
mm,
capture a bid.
strengthen.
Can you explain to the traders
Yeah.
why that happens for traders that
Well,
haven't been in the game as long as we have?
the real simple explanation is that Japanese companies will, and that happened in an extremely big way after 2011, is that they will repatriate money because they will have to make repairs. They will have to maybe even reconstruct whole plants and etc. And that's the very simple reason why yen is strengthening. Now the thing is that after the 2011, they repatriated so much money that they actually and they in the end did not have to, luckily, happily, not use all of it. I think they're still sitting on a part of that pile which they keep in reserves in case there is the next one hitting. But the market, having seen that, now takes it as a natural reaction that when there is a quake in Japan or a risk of a tsunami, people buy yen because that is the direct relation to what is to the damage that it could possibly do, and the money needed to do repairs, etc. Also, the some of the energy companies, they will have to stockpile money because if you hit nuclear reactors, you have to buy your energy elsewhere, right? So that is mainly the basic reason why yen tends to strengthen if there's something bad happening in Japan.
And so when the market realized like, okay, this is going to be not around nuclear facilities, and
Mm,
I was chatting with Shy Girl Tracy, who was on yesterday. I was chatting with her online about this. I'm like, and I even retweeted her stuff because she's like, there's no nuclear facilities in the area, and everybody's reporting everything's fine. And I'm like, the FX market has such like a bad reaction function to this that the markets always shoot first, ask questions later. So the yen,
yeah,
if you guys didn't see it, well, a lot of you were asleep if you were in Europe. This is what happened. Tsunami hits, dollar yen drops from 148.50 basically to 147.90, and then it hit the 80s, and I was like, this is bullshit. We're hitting a new trend low just to stop people out. And I was in front of the computer and I was long. And so I'm like, screw that. I'm staying long. I just widened my stops a little bit and said, there's no way. And so anyway, I think this is, again, a disaster was averted at this point, which is good for Japan and for the majority of Japan, rather. And so I think if you guys believe that the dollar is really going to rally here and the euro's heading back to 114, and the dollar yen is going to do what Kman thinks it's going to do and eventually reach 200 over time, then why not buy these dips that we've seen? And by the way, if we could get above this 200 DMA, it's at 159.50. That's going to allow us to squeeze right back up towards this 155, 160 level or 155, 156 level in the weeks ahead. And that's what I'm looking at with the US dollar, Japanese yen, especially if the euro does this completion, which would be right down here, which would be a full back completion, which takes us to 112.50. So Dale, you should keep that on your radar. And by the way, I confirmed with and this is one of the benefits of using Forex Analytix, right? Is you could go to Andre's work and check out his harmonic work and say, okay, he's looking for that. He's looking at
112.
different formation because he doesn't have it pulled all the way back to where I have it drawn, but
Yeah.
he would be looking at more of a butterfly pattern pointing to 112.50, which same thing I'm
Okay.
looking at basically.
Okay. Yeah.
Yeah. So
All
those
right.
are those are numbers that we might be looking at in a very near term. Although Grega still thinks that 114 should support. Elliott wave and
Yeah.
harmonic patterns are differing slightly, at least right now. So
Yeah. That's good.
yeah, so
So,
that's what I'm looking at now. Andre, again, he's looking at, well, shit, I didn't want to do that. Let me back that up. He's looking at this. He's looking at this, which I'm looking at more of a crab pattern, But anyway, regardless, that's kind of the view at the moment.
hey,
By the way,
Blake, do
Sterling
you
just
ever?
go
Oh,
ahead.
go ahead. No,
No, I
do
was
you
just
ever
gonna
watch the
go ahead.
comments on YouTube? I just got a message on X. Please answer questions or see what type of comments are coming out on our stream on YouTube. You ever
Oh,
watch those?
no, no, because if
Okay.
you guys want to, communicate with us, you can do it over Zoom.
Yeah,
That's
there you
that's
go.
why, yeah, that's
Or
why we
jo or
we do that.
join us,
What's
or
that?
join us in our chat, or join
Yes,
us in our chat room.
that's
Yeah.
where you can really have a conversation with us, right? Like here's a good example.
All right. So stop
So,
being lazy, basically, right?
no, this is the trades room, and you know, Leffy says, "What do you think about the overnight action in sterling? Seems to be getting some wind up in price action." I said, "I think the fall in the euro pound is propping up the pound currently." And he said, "Thanks, Blake." And I said, "Welcome to the community." See, if you want to have a conversation with me about trades that I'm in, or maybe what Kman's doing, like Kman just closed out, some positions here. Here, K, I'm going to give you a strong arm. Good job. I didn't see that yet this morning. But if you want to have conversations with us directly about trades we're actually doing, then you can come in here into our chat room. And remember, our sale is we brought our prices down to 2019 levels. We're giving you a 40% discount, and when you're in, you have then grandfathered yourself into those prices. So even when prices go back to $150 a month, you don't have to worry about that. All right. We have 2 minutes before wait, hold on. Do we have any data? I'm sorry, I was
Yeah,
so
yeah, yeah,
close.
yeah, 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 yeah.
Oh yeah, we have
We have the
advanced GDP.
preliminary
Shit.
second quarter GDP, some PCE prices, consumer spending. Yeah.
And Michael Brown was in our chat room. And we were talking about advanced GDP, and you could again read this conversation from yesterday. I was talking about like the advanced GDP numbers coming out, and he's like, it's a very volatile component. So we'll see what we get a read here. And he is in the Forex Analytics chat room as well, just FYI. He's always in there chatting it up with us, and which is really, well, shit, that's not what I want to do. But that's what I wanted to put up. By the way, I'm going to show you guys something a secret. For those of you that are going to be using trading analytics, I have a pop out of our live squawk. So that's one of those features. I just told the entire public what one of our features are. If you're a subscriber of ours, you'll have a pop up where you can move around your
5 seconds.
screen. There we go.
What? 3%?
Wow,
Whoa.
and
Huh?
prices are going down,
Price
and price index going
down.
down. Woo! Dollar
Nah.
yen's popping.
Yeah,
Dollar
well, I
CAD's
mean, not too much, but
that's
consumer spending still all right. Moved up a little.
this is good for our economy, guys. I mean, overall, but see, the market's having a negative response. Why? Because now the Fed's going to be like, wait a second, do we really need to cut rates right now? And that's
Well,
why
it's
you saw that initial stock market popped up and then it's coming back down now because everybody's going to say, wait a second, you're going to have a dissenter today from Waller, of course. But is Bowman really going to dissent today? I mean, do you
yeah, that's a question.
that's now a big question. And so now you're seeing yields rip, dollar's going to rip, and stocks might go, oh
I
shit, what are
mean,
we doing way up
I'm
here?
I'm I'm surprised stocks are not ripping on
They're
that.
they're
Lower
fading a
prices,
little
better
bit.
growth.
Again, Kman, just because everybody has the same expectation that the Fed's going to give us more of a dovish spin today, and again, these are some of the advanced components of GDP, and you start seeing things like that, and you're like, D- can they dissent? I mean, is Powell in the right to keep rates higher for longer? And that's gonna then that
Well, what a,
what it sets it up for. And I want to let
mm,
K-Man and Dale continue here, but that sets up for today's FOMC and really to have Luke Groman here to talk
Yeah,
about.
Luke is here.
Yeah. So anyway, K-Man, you want to finish your thoughts? I didn't mean to cut you off there.
no, I think Waller will vote. He's going to hide behind the lower prices, and it's a political cut anyway that he wants to vote for. And then, but Bowman is a bit of a question. As I said on the Flow Show, to me, no cutting rates, but they may just leave the door open to September because Powell himself said that they're watching the data. They want to be sure that the data go their way, but he also said that it could be a matter of weeks, not really long term, before they change view. So maybe he just wants to reiterate that on tonight's FOMC show.
Yeah, but there you go. All
Yeah,
right. Well, hey, Dale, good to have you
yeah.
back.
Thanks,
K-Man,
buddy.
thanks for all your stuff. I was listening to the Flow Show this morning. Great looks on the yen and all of your views there. And the dollar index has just broken new trend highs, guys. So
So
um
was it a real breakout? Now can we answer the question? As long as
I
we're
mean,
above 98, I don't think you could be short.
I mean, while we backed up to the trend line, the neckline last night,
Yeah,
pointed it out. I've been just aggressively long the dollar, and it looks like
yeah.
we're going now, and this is well ahead of the jobs report and all the other FOMC, obviously, and everything else we got going on. So anyway, I took up enough time, enough of Luke's time. Luke, thanks for
All right.
being here. Dale, it's all yours. Passing it over
Okay.
to you. All right, buddy.
All right. Thank you, Kman. Thank you, Blake. Welcome, Luke. How are you, buddy?
I'm great. How are you, Dale?
It's good to see you. I don't have the greatest lighting. I'm in a place a mile from the beach, and that's Anita's to get out of the heat. So I'm a beach boy again this summer. Why don't we start with the Fed? Does it matter?
So, does a Fed matter?
Yeah, does it matter what happens with the Fed? And they're getting some strong data today in front of their meeting. So what you think they has justification to stay on hold and continue to aggravate President Trump?
Well, I think there's sort of a two things. I think there's a tactical, and then I think there's a bigger picture context. So the tactical, the thing I don't think anyone's paid enough attention to with this borrowing estimate of Monday night is that Besant shifted $450 billion of borrowing out of the second quarter into the third quarter. So now
Okay.
the borrowing in the third quarter is up by about 450 billion. And the US's two biggest creditors, Japan and the UK, are having their 10-year bond markets break out, and on a yields basis. And in the second quarter, that Besant shifted 450 billion from the second quarter to the third quarter.
Yep.
10-year Treasury yields rose. They rose in the second quarter.
I remember that was a very unusual move for Yeah, on the easing, you had that big move up in the
So you
10-year
have it, yeah.
yield.
So and you shifted $450 billion of supply out of the quarter into the third quarter. Yields rose anyway.
Yeah.
And now that's why I think Powell matters. Because if Powell doesn't cut here, if he doesn't get the dollar down, I think
Okay.
we may see for the fourth straight year, 3Q22, disaster, 3Q23, disaster, 3Q24, disaster, in terms of, bond yields up, stocks down big, dollar, some sort of big issue. Disaster is probably too strong a word, but only marginally. Like I think Powell matters a great deal tactically for that, because to your point, as you and Blake were just pointing out, dollar on a short-term trading basis is breaking out. He hasn't
There
cut.
it is.
Dollar goes higher. 10-year
Yeah.
yields start moving up. 10-year yields start moving up. Besson's got an extra 450 billion to place into thin mark. Like now you're going to get the 10-year to 4.6 in a hurry, 4.7. And we know what happens when the 10-year yield gets to 4.6, 4.7. Everything starts going boom around the world and in U.S. markets. So I think
Yeah.
Powell matters greatly in the short run for that.
Okay.
Now, from a contextual standpoint, I think most investors are really missing the forest for the trees, to use my own firm name. Um, in the longer run, I don't think Powell matters at all. I think Powell is he's a lame duck. I don't think they'll fire him. But what I don't think investors has grasped is what just happened geopolitically over the last 3 months, which is to say, China demonstrated it has complete or has near complete control of U.S. defense supply chains with rare earths.
I was going to
It's
bring that up too, and you've been
it's
writing about that.
I've been writing about it. How often do we hear, well, the U.S. military backs the dollar? We hear it all the time.
Yeah.
Ultimately, the U.S.
Hegemony.
military. Well, guess what backs the U.S. military? It's Chinese rare earths, and they're not shipping them. And I don't know if they're ever going to ship certain types of military rare earths to the U.S. again, ever, because they know we're going to use them to make weapons to point at them. So the point to
It's a
all of
big
this
deal.
is that Powell is sitting here worried about his inflation mandate and his employment mandate, and the U.S. military needs industrial policy yesterday. And so we had
Yeah.
this, I think, this sort of, it was like the opening scene of Jaws where the girl gets attacked and everyone's like, whoa, but you never see the shark.
Yeah.
This MP Materials acquisition or investment by the Defense Department 3 weeks ago that surprised everybody. Everybody's like, whoa. I think that was like the opening scene of Jaws in terms of something big just happened. We haven't seen the shark yet. The shark is the U.S. is going to industrial policy. The DoD is running the economy now. And Fed is either going to play ball or get out of the way or be circumvented by some combination of stable coins, regulatory fiat, whatever. They will circumvent, but they're going to get what they want, and what they want and need is what Besson has referred to. We're going to run this thing hot. We're gonna drive growth. I wouldn't be surprised if he shifts to the front end either this quarter or next quarter in the QRA. Stable coins, if they can ramp them up, I think will take more parts of T-bills at basically zero. But they got to get interest expense down. They've got a big problem. They have an acute fiscal problem that I just laid out, where he shifted bonds last quarter.
Right.
This quarter, yield still rose. You got a dollar that's rising. You got a military that can't make weapons without China. You have a U.S. that competitively, in many critical areas, is starting to lose to or is losing to China. And you've got a
Yeah.
fiscal situation. It's a mess. So
And you also, yeah, you also talk about the reshoring of our military industrial complex, and you bring it up in light of how we've had tremendous drawdowns of military supplies with what happened in the Middle East and Ukraine. So we're pretty U.S. is pretty vulnerable here, aren't we?
yeah, it is.
Yeah.
And ultimately, people say don't never bet against America, and I agree with that. The issue is that if you own long-term bonds thinking you're going to get paid on a real basis, you're betting against America. It's a very bad place to be. Long-term treasuries are now in the spot where Saddam Hussein was in early '03. There where Gaddafi was in 2011. Like they are standing in the way of the full force and might of the U.S. government. And that's not a place I like to be. I'm just going to kind of,
Just like the dollar, it's we put in a higher low. This was a Moody's downgrade. Even bear markets could rally, right? We get bear market
Yeah. Oh,
rallies
yeah.
here.
Yeah.
So,
And to be clear, the downside for bonds, in my opinion, for long-term bonds is all on a real basis. Like they may actually make
okay,
money. Yeah, they may actually make money on a nominal basis because in this, like, look, in the last great power competition, they generally did fine. I mean, for example, World War II is a very extreme example. They did outright yield curve control. And they pegged, they capped yields in the 10-year at 2.5%. And, the value of those 10-year bonds collapsed over 7 or 9 years, but you got paid every dollar you were owed, and the price of the bonds barely moved. And I think that's actually some version of that is much more likely. We probably trade in I don't know, the 10-year yield probably stays between 4 and 4.6 for the next 5 years. And,
wow, really? That's
and
right. I mean, we are in, it's like the ranges are compressing here
yeah,
on the
yeah.
weekly. There's your range. So you think we're going to stay confined? It's like here's 412 and here's like you were just saying, 470.
Yeah, I
So,
think that's why, sort of yes. That said, is it possible they reset that range lower? Sure. It's very possible the range is, 3 to 3.5. And in that case, you're going to make money owning the bonds here nominally,
okay,
but
right.
stocks are going to, S&P is going to double, gold's going to triple, Bitcoin's going to quadruple, inflation's going to go back to 8%. They're going to tell you it's 3 or 4%. And your purchasing power, your bonds are going to get destroyed over a 4 or 5 year period, and that's sort of my base case. I think that's very likely to happen, some version of that.
Yeah, I know a lot of people are talking big targets, and I could see how it could happen, 7K S&Ps, etc. But aren't there periods of exhaustion where uh and huge margin debt that, we you should be tactical and not just buy this kind of advance and wait for some kind of pullback here? Because if rates come down for a little while, couldn't it be there's a little bit of a growth scare, even though we're getting these numbers?
Oh yeah, like if I was
After tariffs.
yeah, if I was managing a monthly book,
Yeah,
I would be pretty low on my skis right now, seeing what I'm seeing between
yeah.
that chart there, as you're showing with a, we're extended in the S&P, and again, Besson's shifted 450 billion out of 2Q into 3Q. He's got to place $1 trillion now, and 10-year yields rose in the quarter that he moved that issuance out of. He reduced supply by $500 billion, and the
Still didn't
yield on the
help.
10-year went up. Like
Yeah,
it's setting up for this bond volatility translating into all volatility that we've seen literally. This would be the fourth straight year, 3Q22, 3Q23, 3Q24, 3Q25. I think we're going to get it again. I'm a buyer of any weak, on the weakness, if you get a weakness in the S&P tactically, because ultimately
yeah.
the Defense Department's going to get their money.
Okay. When you look at things like gold, so this to me look people are saying it's a healthy consolidation. It could be, but look, it's been a monster. Why can't we pull back towards 3,000? Maybe the dollar's a catalyst for that happening, and yields going back to the upper end of the range. You have a view on? Are you hedged at all on your gold? Because
No,
I
I'm not
know,
hedged at all on my gold. I mean, could it
yeah,
could it pull back there? Sure. I mean, there's no
yeah,
reason it couldn't. That said, it's to me very clear that it's going back into the system as a neutral reserve asset. You can see when you see
right,
things like the shipments of gold to China, to Saudi Arabia, to the Middle East. The BRICS currency is gold. People keep looking for the BRICS
right.
currency. Nothing's going to compete with the dollar. Nothing the BRICS can put up is going to compete with the dollar. Gold is
Except
competing
gold.
with the dollar. Gold,
Yeah.
gold has crushed the treasury market over the last 10 years. And gold is the BRICS currency. So ultimately, if trade keeps rising over time, which it should, it may look different. The flows may look different. But I think there's going to be more. I think, the days of central bank demand for gold being 1,000 tons a year every year, I think that's going to go on ad infinitum for the foreseeable future. And so ultimately, you're going to have this whale bid supporting that market over time. And I think that's ultimately, it leads me to more, hey, it's a healthy consolidation. But
Are you in the revaluing camp that the U.S. could revalue their gold reserves as kind of an emergency move?
yeah, I do. I absolutely think they could. I think they might. I mean, all else equal, you'd like to have it be a higher price, but at $3,400, it's probably a trillion too. All they would have to do, it's literally a bookkeeping entry. Powell of Besant tells Powell revalue the gold from $42 an ounce up to $3,400 an ounce. No gold gets sold into the market. It's strictly an accounting record keeping issue, and it deposits about $1.2 trillion into the Treasury General Account, or TGA, which with which Besant could do. I think there are some limits on what he can do with it, but basically he could say, it's one of these things where he already has a fiscal issue. He shifted 450
Yeah.
billion. If the long end starts to get sloppy, they could do that, and he could say, "Look, we're not going to issue any long-term debt for the next 2 years till after midterms." And so now
Okay.
you could get the U.S. saying, "Hey, we're going to run industrial policy. We're going to run inflation really hot. Nominal GDP growth is going to be 8, and the 10-year might go to 4 because there's no issuance, and there is some number of just mindless liability duration buying that's going to happen, like no matter what happens to inflation, basically, right? So, some insurers, some pensions, they're going to buy 10 plus year treasuries. I don't know what the quantity is. Is it 300 billion a year, 400 billion a year? I don't know that number, but it's not nothing. And so as long as Besant conceivably an extremist could revalue gold and basically reduce long-term issuance to basically nothing, or certain critically under that mindless bid number. And then, yeah, you could get a 10-year, well contained with inflation ripping, with growth ripping, with industrial policy expanding, with more investments and acquisitions being made by the Defense Department.
All right. Why don't we talk about tariffs since we're in the window and they're negotiating. They're coming up with a higher number for India, 25%. So, I look back at history, Luke, and in the 30s under Smoot-Hawley, we started at a 5% level and went to 20. So it was 4 times magnified on that. And here we're starting at 2 and going to 15. And now, some might be over that. So why are people celebrating this just because it's not 150? And do you think it's going to take a bite out of growth and consumer spending? Uh, I mean, it is a tax, isn't it?
It's essentially a tax. It's a reshifting of sorts, right? So we wrote a report back in maybe March. We were highlighting research from 1992, and I forget the gentleman's name, but the gist of the report was if you try to do free trade with the Asian economic model, you're going to get killed because they're never going to do free trade. They're going to protect it. They're going to mercantile, and they're going to eat your lunch. And he was right. The Chinese thumped us because they didn't do they don't do free trade. And so, this is like saying I'm going to fight Mike Tyson, but we're both going to use one hand behind our back, except Mike's not using one hand behind his back. You would be
Okay.
stupid.
Yeah.
So this starts to rectify that, which is to say it starts incentivizing bringing back production. It's bringing back jobs. Now that's the trickier part. The easy part, I think, and that's maybe why some of the celebration, right, is in theory it's great for growth. It's good for revenues on a sequential basis. That's the easy part. It's like it's like when you jump off a 100-story office building, 50 floors down, you're like, man, this feels just like flying. But that's not the hard part, right? The hard part's pulling the ripcord. And then the worst part is if the chute doesn't open, it's not so much the fall that kills you, it's the sudden stop. And we're now, as we move over the next 6 to 12 months, we're going to get into the execution side of the jump, right? We need to start bringing back capacity. Do we have the grid? Do we have the supply chains, the non-Chinese supply chains with our allies to bring back the grid, to build the factories?
We don't have the
Um,
grid. We don't have the power for all these data centers
no, in short, I mean, there's some things they can do in certain parts of the country with some sort of patchwork stuff, but even then, there's long lead times on some of these, these turbines they can plug in. A power plant's going to take you 5 to 10 years minimum if you started like now.
to
Um,
build.
to build. And you can add turbines and plug them in and sort of smooth some stuff over, but a lot of the lead times on these turbines are out, 4 to 5 years, and so it gets trickier with each iteration of the game in
Who
terms.
makes them? Who makes the turbines? Are they made here?
GE,
Okay.
Schneider, Cat,
Okay.
Cummins.
So we
Yep.
have them here. We don't.
Yeah,
We
we've
not.
got yeah,
Uh,
yes, for
Unlike
sure.
transformers, our big transformers, they come from China still, don't they?
A big chunk of them. Yeah, they are also made in Japan and in, I believe, Germany.
Okay.
ABB may make some of those as well, um,
I hear
but
they're
yeah,
going to be
so
hard to replace if we have problems.
that's the problem. Like the Smoot-Hawley example, I think is useful, but I think it's also really important to remember Smoot-Hawley, the United States was in the China position, and in the U.S. position was Weimar Germany, right? So,
Okay.
or more subtly, Europe more broadly. And so it is, I frequently hear that comparison, and I never hear, and then I hear, well, tariffs aren't going to be inflationary. And it's
Yeah,
like,
I
well,
heard
yeah,
that too.
the ultimately they're absolutely going to be inflationary, because we're short labor, we're short transformers, we're short the industrial capacity, and we have a bond market that we absolutely cannot allow rates to price that inflation, right? So we want to aggressively reshore. Great. I think that's a good thing. It's a great thing for America. It reverses mistakes of the last 35 years.
It's
And
going to
we
take
have that.
time.
It takes time, and if we want to do it's going to be modestly inflationary if we do it slow, but we don't have the time. We need to do it fast because we're losing to China in a lot of key areas, and so it's going to be highly inflationary. And when it's highly inflationary, and when I say highly, mid to high single digits, maybe low double digits, uh, you've got a bond market that we can't afford 10-year rates over 4.6%, 4.8%. So they're going to have to cap yields with something, and when they do that, that's wildly inflationary. And so I think a little, what I can't tell is how much of this, is this simply relief, a follow through of relief that, hey, April has been reversed and the tariffs
Yeah.
haven't been that bad. And is there, and I don't think there's a lot of this in the market yet, but I can't tell, which is like the playbook I just laid out. You don't want to sell equities. Equities go to the friggin' moon, right? Like, if you're going to have to cap yields and reshore, inflation's going to go nuts. And everyone thinks, oh, well, if inflation goes nuts, it'll be like the 70s and multiples will collapse. Not necessarily. We in America have not seen a true emerging market type setup ever in anyone's lifetime.
Yeah.
And, or something like what we saw in Europe or in the late, in the 1920s, where you get serial devaluations of the currency, capping yields, what have you. That's, if US inflation is running 8, nominal growth's running 8 to 10, and somebody's capping the 10-year at 4, you don't sell equities on that. Not at all. Even though inflation's ripping. You buy equities, you get out of bonds, you put your bonds to the government.
Would you be selling this dollar rally, Luke? Long term, still looking for much lower numbers in Dixie?
Absolutely. Absolutely. Everything he's talking about, these deals, Japan, Europe, they're
Yeah.
rebalancing trade. And if they rebalance trade, the dollar's got to get waylaid. Like that's just the reversal of those flows. The dollar's got to get waylaid.
Maybe you could straighten me out historically so everyone knows the numbers of where tariffs went to in the 30s. But I believe that global trade back then was only 9%. What is it nowadays?
Oh,
Uh, is it bigger or smaller
I
than what it
think it's
was back?
bigger, but I don't know that number. I want to say I saw something like 16% or something.
It's not that much different. Yeah. Okay. All right.
I mean,
I
yeah, I
was
mean,
curious.
you can see what happened in the 30s, right? Which was,
Yeah.
real trade fell. The value
Yeah.
of financial assets fell on a real basis dramatically.
Right.
There was some political stuff there too, and we may we may see some of that political stuff. I don't know. Um, And I think that kind of filters back to the whole, the point on gold, which is I think it's a healthy consolidation. Could it pull
Yes.
back? Sure. But
Yeah.
given the
Buy
geopolitical
it.
trade, this and that, it's not the time to be selling gold,
Yeah.
secularly.
Yeah. Just tactically if you did it. Anyway, Luke, anything, the most important thing that we should keep our eyeballs on, say, over the next 3 months going into the fall?
I think it's twofold. I think it's it's watch the dollar, 10-year yields, et cetera, in the next month, in the next couple of weeks, regarding what I laid out at the start, which is this, Besant shifting $500 billion from 2Q to 3Q should
That's a big
not
deal.
have led to a rise in 10-year yields. It shouldn't have. Yields should have fallen. It's very, very troubling. And that ultimately bids up the dollar. And we know what happens once the dollar gets too strong.
Yes, we
Everything
do.
starts to unwind. So I'd be watching that tactically in the short run. And then I'd be very closely watching the stablecoin announcements. I don't think people understand
I don't.
the I'm seeing a lot of discussion starting from the lens of the last 40 years, which is, hey, how do these help the banks? How do these help consumers? They don't care. The United States is losing to China. The United States has an acute fiscal problem, and then that United States, and they have a Fed who won't help them get interest expense down to do a deal with any of this. And so they are going to try to uh, basically support the Treasury market by creating a vehicle to shift issuance forward and to circumvent the Fed. Like, this is all about financing unsustainable deficits. And so, Goldman Sachs paired with Bank of New York Mellon a couple of days last week. Hey, we're going to start shifting money markets. This morning, before I jumped on, JP Morgan partnering with Coinbase. Jamie Dimon could not have been more dismissive of Bitcoin over the
Yes,
last 5 years. Now he's
correct.
partnering with Coinbase. Why do I think this is happening? Because it ties into the point. They don't care about the banks. They don't care about the consumers. This is about the US government and a geopolitical competition it is losing. And I think the conversations that might be happening are like, look, hey, if you don't get with us, Besant gets with these guys. If you don't get with us and help us do this, I can't promise you that your next stress test is going to go very well.
Okay, what's the potential blowback of this not working out?
Well, there's two potential blowbacks. Number one, they do lose control of the Treasury market. We have, another April where you get, 10-year yield starts to run away from them. This bond market dysfunctions like it has each year in the third quarter since then. And then the Fed does have to step in. Like, that's if the stablecoin Hail Mary, if you will, doesn't work.
Yeah.
And if it does work, I think you're going to see the dollar get hit hard. And I think you're going to see growth pick up sharply. And I think you'll see, on a slight lag, inflation pick up sharply. Those are the two possible paths with it. And, it's a result of, look, we spent $31 trillion as a country in debt over the last 20 years, and we got nothing for it in the last 25 years. We have literally nothing for it, basically. We wasted 31 trillion, and you waste 31 trillion, in debt. That debt's got to get defaulted on, or it's got to get written down on a real basis, and that's what we're bumping up against now.
So forest from the trees, way ahead of the curve on things that we're seeing coming home to roost. And Luke has been getting this message out. I think he saved a lot of people a lot of aggravation by being bullish Bitcoin and gold. And every time I get tempted to trade the long side of TLT, I think of my buddy Luke, and I say, "Okay, Dale, do it, but make sure your stops are in."
Yeah,
So
keep them tight. Keep the stops
yeah,
tight.
yeah. So sign up at least for Luke's free thing, and he includes like his highlights of his videos. He has a YouTube channel, and he's a watchman for all of us as we approach the end game of the U.S. debt system. So it takes someone that could see through all the noise, and you don't know what's real anymore. But if you're talking to Luke, you know what's real. That's my view.
Thank you.
All right, and I think that people should learn about these stable coins and everything, and that's including me, so I know what's really going on. Because right now, all I know are candlesticks and which way, which way they might go. So,
I'm
Luke,
learning
really,
as I go. I'm being forced to learn them as I go because it's
yeah,
like it's happening so fast. And I think part of the reason it's happening so fast is the government needs it to
markets.
happen fast. It's that desperate.
Yeah, people say the markets are broken, Luke, and I say I'm trading the same candlesticks I was in 2000 and 1990. So, the charts are the same. I'm sure, I didn't have algos to battle with, but then you had floor traders to battle with. So,
Yeah.
I don't think the markets are broken. I think they're just expressing what's going on.
Yeah, the rules change, right? Like the rules
Yeah,
change, and it's so important to understand the rules as they shift and change of those markets, and they
yeah.
change from time to time and without warning sometimes.
Yeah, one of the best things that happened was you having problems in 2008 to learn what's going on and then spreading the word. So, Luke Roman, my friend, thanks again for being here and edifying the F.A.C.E community, buddy.
Thank you very
Appreciate it.
much. I appreciate it.
All right, Luke
All
Roman,
right.
everyone, follow him on X at the minimum at Luke Roman and sign up for his letter and stay informed. It's part of my intelligence gathering. All right. Thanks again, Luke. Have a good
Thank
one,
you.
buddy. See
Have
you
a
in the
great day.
fall.
You too. Yep,
All
sounds
right.
great.
And that's a wrap, everyone. You could join the team in 14 minutes on the Morning Edge. And of course, we record all of these interviews. So you guys could always go back and replay them. So you're very welcome, everyone. Ingmar, Mike, all you guys. See you tomorrow. Don't just count your trees. Yes, Mandy. Or leaves, or branches, or roots. Count your blessings. Thanks for reminding me, Mandy. Adios, everyone.